Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, June 10th, 2016. We have quite a bit of topics to cover, so I'll just briefly go over what we're going to cover. We'll look at the major asset classes, stocks, which hit all-time highs but ran into resistance. I'll show some examples of that. We'll look at the bonds, including junk bonds. We'll look at currencies also as it translates into more volatility for the various commodities, gold in particular. Look at oil, which may finally hit resistance. Natural gas, very interesting chart. Also, we'll finish off with some agricultural commodities. All right, this is S&P 500 ETF SPY. Our proxy for the general market, and this is because about, I think, 80% of investable United States equity landscape basically is represented in this chart. Anyways, including dividends, this is S&P 500 including dividends, we did hit all-time high yet again this week. My view on the stock markets, on the particular United States stock market, has changed from bearish to bullish. This happened around here, and I explained why, because we had a perfectly good opportunity for the bears to go ahead and break below the support. The bears did not take this opportunity. In fact, the bulls took over and we turned around and made an all-time high. This was coupled with a significant improvement in breadth indicators, volume indicators, etc. that I follow. I'll show you a little later. But the fact of the matter is, all-time highs are quite bullish. So I think we are sort of in the middle of a correction. In fact, Friday was, we had quite a bit of selling. We had a gap down, significant gap down. We attempted to recover, but really failed. So the gap still remains. So this represents, some selling pressure, and it was in a higher than normal volume. So this indicates some selling pressure. Now it could be that where the bulls are locking in gains. If you bought down here, this makes perfect sense to sell some of your holdings up here. Of course, if you bought down here, it also makes sense to sell some of the holdings if you hold any. Now, the million-dollar question is, of course, how deep of a correction are we going to get? And the obvious first support is 50-day moving average here at 208, and the second obvious support, and actually this is a very strong support at around 203. This includes dividends, of course, so around 203 here. And let me explain why there is a strong support. I'm going to put on an indicator called volume, volume by price. You can see there is a lot of volume that is traded in this area here. So there's a lot of support there. If we break below this level, 202, most likely, next support would be around the 200-day moving average, which is at 200. Now, we could completely unravel, break this support, break the 200, and just retest February highs and eventually retest February lows. Anything is really possible in the stock market, and I really learned that we can, whatever we're thinking is going to happen, it just speaks to the how much probability are you going to put on it. Is it going to be a high probability event or a medium probability event, a low probability event? I think that the lower probability event is that we completely unravel and collapse. I think the higher probability event is we find support somewhere around here, here, or here, and then rally back up. For those of you who have been watching my videos regularly, you can see you're familiar with this chart, and this is Market Breadth Index, my proprietary indicator that attempts to ascertain whether or not the S&P 500 is in a primary bull or bear market. And in fact, it went into a bear mode back in September of 2015. So this entire rally here was a bear market rally to me. if you're a subscriber, we did short S&P 500 in this area here, and we rolled this entire leg down to a nice profit. We turned around here and broke out of this W formation, and then continued higher. But at this point in the game, I still treated this entire rally as a bear market rally. Again, we shorted up here, but the bears really failed to push the prices lower, and we rebounded and made we came close to all-time highs because this S&P 500 without the dividends. Now, per this system, the data now says that we are in a primary bull market, and I'm viewing basically pullbacks in S&P 500 as buying opportunities. Can we unravel completely and just collapse down? Absolutely, we can. Yes, we can. However, I think the probabilities of that's happening right now is lower again than the probability of us finding support here and making pushing for the all-time highs again. Now, we had quite a bit of volatility as of late, and I meant as of last maybe a year or so in the stock market. Basically, we went from a 2-year low set in February of this year, and we're now approaching all-time highs. And this is just S&P 500 itself. Without the dividends, this is very unprecedented type of rally. First 10 days of this year, first 2 weeks of this year were the worst recorded performance in the history of the stock market in the United States. So there is a lot of first ever in once in 70 years, once in a blue moon type of events that are happening in the stock market as of late. My personal opinion is because of the non-stop intervention by the central market. So this is adding to the volatility in the markets, of course. This is S&P 500 with dividends. This shows that we had a 52-week closing low here in February, and then we turned around and made an all-time high here in just this week, and then we pulled back. So again, this is a very unusual type of behavior. In fact, I think that the statistics go saying that this type of rally is something like once in 70 years. So, this is just something to keep in mind that we are in very unprecedented times, and I think again this is due to intervention by the central banks. Nevertheless, some of the bullish perspective I'm looking at, this is Semiconductor Etf. This is a high volatility and high risk ETF, high beta. Stocks are in here. You can see it's making all-time highs. So here appetite for risk is quite good. Relative performance is actually quite good as well. For this, this is a broad semiconductor ETF. So it has a lot of semiconductor stocks in it. So this shows good. I think this is a good appetite for risk in the stock market. Next, I want to show IWM. This is Russell 2000. This is actually not the chart I wanted to show. Let me show you. Here it is. I meant this chart here. Looks like we made a higher high here. We're approaching this highs here from December, and maybe we already ran into some resistance. And you can see there is a divergence here on the momentum indicator relative to the price itself, this price momentum oscillator. Now, momentum divergences are quite common and don't necessarily work out. We could just turn around and continue higher on the price itself. But nevertheless, the people do pay attention to this type of thing, so a divergence on a momentum indicator could be that we're in for at least a sideways, possibly a corrective period in the stock market. This is NYA, New York Stock Exchange Composite Index. resistance here at 10,641. We hit 10,648 just this week and pulled back with a gap here rather sharply. For now, looks like the resistance has been reaffirmed, so corrective period of some sort is certainly in order. First support I see here is obviously, obviously first support here is a 50-day moving average, but then you can see here this low here at 10.11.19, and the 50 and the 200-day moving average is also around that area. All right, let's move on to bonds. This is JNK, the high yield bond ETF, holds all types of low quality corporate bonds. So first of all, why am I even looking at it? The correlation between S&P 500 and the junk bonds are very high, and I showed this before. They're almost always positive and almost always quite high. What I like about the junk bonds in general is that they're quite they're lower volatility than the S&P 500. So, and they pay nice dividends. So if we're going to be trading them on the long side, it makes sense to have some junk bond exposure because of the above stated factors, because of the lower volatility and the nice yield on them. So in any case, I mentioned that the junk bonds were surprisingly resilient, and they just continued higher. Again, same with the stock market, the bears really failed to take advantage here, and then we continued higher. Now, these are not even close to all-time highs, but nevertheless, I think, you know, if the stock market finds support, it only makes sense that the junk bonds find support as well. And the obvious support here is at around 34, 37, and possibly around where the 50-day moving average is. Moving on to the higher quality ones, this is municipal bonds, all-time highs again. Very sharp move. I think it's quite overextended, so I think we're gonna get a corrective period of some sort. This really, like for example, we had some similar here, very almost vertical advance, and then we had a corrective period, but then we just continued higher. Anyways, there is a lot of interest in buying buying bonds right now. So obviously there is people are thinking about protecting their capital and receiving dividend or coupon income. Further on, we're looking at AGG. This is a kind of like a proxy for the bond market because it contains a lot of various kinds of bonds, but not the municipal bonds. So I showed this chart in the past, and this is actually a weekly chart. You can see that there was this large consolidation going back to 2000. It was almost a year worth of consolidation, and then we broke out of this consolidation. And you know, technical analysis says that if we measure the depth of the pattern, then this entire pattern should be replicated on the upside. So it looks like we had a depth of a pattern is 3.4%. We're kind of getting there. We're approaching it. There's maybe another percentage point, maybe a less than percentage point to go before the target. So it's possible that bonds are getting a little bit overextended, and maybe we'll get some sort of a corrective period in bonds in the not so distant future. So you know, it's possible that we can just continue higher indefinitely, but more likely we're going to see some sort of a corrective action in the not so distant future. Further on is this is just a long-term bond composite going back to 1999, and this shows the 50 and the 200-day moving averages. I removed the price, and this just shows that we're basically in a non-stop bull market for bonds, and this little bear markets for bonds are marked here with little circles. So as of right now, I think quite bullish. You know, bonds are quite bullish. And then finally, finishing off with the bonds is TLT, the highest quality bonds, all-time highs. This is total return again. This includes the dividends. All-time highs for TLT. My subscribers are long bonds. We have bonds in our portfolios. So that, here of course we have Janet Yellen is going to be speaking next week on Wednesday, I believe. So it certainly will send shockwaves throughout the various investment universes, and bonds are certainly going to be also affected by her speech. So if you have bonds open, not a bad idea to tighten the stop maybe and just see where it goes. And finally, TLT on a longer term time frame. These are all-time highs. Just this Friday, we broke out to all-time highs and closed at all-time highs actually. 134.78. This is 134.17. So we are certainly looking like we're breaking out above this possible cup and handle formation. And I marked the cup and handle. This is a giant cup and handle with 20% depth, and this is a smaller cup, I guess, which is 6.8%. So we could easily get this whole thing, at least this thing, 6.8% replicated on the upside still. But again, we have several market moving events coming up just shortly. For example, Janet Yellen is speaking next week, and then Brexit vote is on the 23rd. All right, let's move on to the Forex universe. This is US dollar composite index. Quite a bit drop here last week on the heels of poor jobs report, but looks like we may have found support here and bounced higher. So, Thursday and Friday we had pretty strong days here. It's really kind of difficult to read this chart, so I kind of want to go to a larger time frame. So here is a larger time frame, and this is a weekly chart going back to 2014. Here we have picture is a little bit more clear. We had a breakout here, a continuation higher, and now we're sort of consolidating in this trading range here. For now it looks like we did hold support here at 92 and change, and then rebounded. So it's possible we're going to stair-step higher, especially since we have Brexit vote, and there's a lot of volatility here. Next chart I'll show the British pound and the euro itself, but there's all kinds of polls coming out almost daily in Britain about Britain leaving the Eurozone, European Union, etc. So there's going to be a lot of volatility here. As far as euro is concerned, I'll actually show next chart. It's more clear there. Okay, this is euro versus the US dollar, and this is a weekly chart going back a few years here, 2014. Pretty clear downtrend here in 2015, and since then 2014, and since then we basically had a very long consolidation range. Now you could make an argument that this consolidation range is a continuation pattern, and we could make a continual lower from it, or you can make an argument that we're bottoming out. Either way, for now I see that this euro versus US dollar was not able to break above what is it, 1.14588 here. Looks like we're headed again for that retest. Maybe we will break out this time. I mean, this pattern looks okay, but we had a similar pattern here and we didn't break out above it. So if the euro does not break out, we could see obviously strengthening dollar as a result. Here's the British pound. This one is a little more clear. This is a daily time frame for British pound, and just on Friday we had a pretty clear breakdown below this level, so potentially we're going to continue lower, which would also help the dollar. And again, since if it's going to help the dollar, then it's going to weigh on all kinds of commodities. If the dollar rallies from here further, all kinds of commodities will come under pressure, and the biggest one, of course, would be gold. This is GLD on a daily time frame, and as you have probably guessed, gold loves weak dollar, and this is where there was a weakness here and a poor jobs report. The dollar dropped significantly. You can see there was an enormous gap here. We consolidated, gapped again, and continued higher. So we will see who is right basically at this point. It's either gold or the dollar that is correct. I don't think both would be correct. I don't think dollar rallying and gold rallying at the same time is likely event. It did happen on occasion in the past, but it's quite rare that happened. So Janet Yellen again next week, and then we'll see where the dollar goes from there, and by extension gold. GDX. One of my proprietary indicators here again, gold breadth index. I think we're in a bull market for gold again. But this thing is really volatile, and we went from all-time lows to 52-week highs. So another one of those rare events again. And really, we didn't really have a deep pullback. It was kind of very shallow pullback. It was not even a 38% retracement. So again, I think that once the next week with Janet Yellen is gone, and we'll see where gold and the gold miners by extension go. Okay, moving on to the commodities. This is West Texas Intermediate, light crude oil spot price daily chart. So, there's a lot of people saying that there's a lot of correlation between price of oil and the price of S&P 500. In my opinion, this is a spurious correlation, and if you look at a very long-term chart, you will notice that there's very little correlation between the price of oil and the S&P 500. But nevertheless, right now, there's a strong correlation between the price of oil and S&P 500, and you can see the very similar pattern to S&P 500, which this is oil bottomed out in February and then continued higher. Now running into resistance, and lo and behold, S&P 500 is also running into resistance. So for now, there is a lot of correlation. Whether or not this will unravel in the future, it's difficult to say. But in any case, already, I mean, it's really kind of hard to see it on this chart. So let's just go to the bigger time frame, and this is a weekly chart of oil, West Texas Intermediate again. Very large rally off of the lows here, and we're right at around $50, and there's quite a bit of resistance here from this peak and from this peak in October. So it would not surprise me if we at least trade sideways and possibly pull back from here. Maybe we'll get something along the lines of this, trading sideways and then a plunge lower. Also, USO, United States Oil Fund. This pattern is more clear here. This is a rising wedge here, and basically at resistance from support here and from the broken support here. So it would not surprise me again. Maybe we get something sideways like here, and then maybe we get a plunge down. Again, it's also possible that maybe for some reason oil will just go up in price because of supply issues or whatever. But if you think about it, they're cutting production. For example, in the United States, the fracking business is under pressure because there is low oil prices. And do you think if the oil prices will increase, won't those production won't they ramp up production? I think they will ramp up production. So it's the issue right now. It's overcapacity. For oil. This is natural gas. spot price on a daily time frame. It's a very interesting chart. Looks like on Thursday we broke out here above this major resistance level at around $2.50. And this breakout was obviously on a very large volume, which actually makes sense because if you are bearish on natural gas and you are bearish down, let's say here, where would you put your stop? You would put your stop just above the previous high, and that would be the previous high. So looks like this big candle took out a lot of stops here. So this looks good to me, and actually next chart I'll show it even more clear on a longer term time frame. But so again, went from multi-year lows here, and looks like we are making a series of higher lows and higher highs. So this is another higher high. Possibly we get a pullback, maybe a consolidation sideways, and I'm guessing we're going to continue higher now. So this chart, next chart, this is a weekly time frame going back about 3 years. Very long-term, drop to multi-year lows. We went from what, $6.50 to was it $1.50 or so here. Very large drop. Now looks like we are breaking out. Here's the $2.50, and this is an obvious, very strong resistance level. The reason why it's very strong is because it was touched on multiple occasions here. We almost touched it here. Here in September, October of last year, we broke that level and then bounced back to just that level in the beginning of this year. And now looks like we're breaking above that level. So this is a very important level for the natural gas. This is a very nice looking candle and good volume here. So it appears that we are breaking out to a new bull market in natural gas. So it would make sense to look for buying opportunities for natural gas now. Okay, this is Agricultural Commodities Fund, DBA. This is a weekly time frame. This is an okay fund to hold. Well, at least medium term, I guess is okay, because it does hold a basket of futures for various commodities. So there is some slippage, but it's not terrible, I guess. And looks like we are making a series of higher lows and higher highs. And last week I pointed out this breakout here. So this week we followed up with a gap up. Now this advance is quite sharp, and we are approaching this level here at 23 and change. So it's possible we're going to get some corrective action. But I think that this is now looks to be in a bull market. So again, I'll be looking to buy this fund on any significant pullback. Also, this volume here really feels like we are overextended. So this could be like a buying climax of some sort. And finally, I wanted to show a commodity that could be very interesting in the days, weeks, possibly even months to come. This is coffee, continuous contract. You can trade this commodity with a symbol JO, Joe. Now, looks like we are at the very least attempting to break out above these two peaks here. And this week we really tried, but looks like we got sold off. So not very decisive breakout, but enormous volume. So I think that what happened is we took out a lot of stops above this level, above what is it, $1.36, 37 or so, but then pulled back. So kind of not 100% indecisive, but it certainly looks promising. Maybe we get a little bit more sideways consolidation than a breakout, and then I'll be looking to buy on any kind of significant pullback. All right, that's it for this week's recap. Thanks for watching. Please stay tuned on how to find us on the internet. Thanks a lot. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now, So please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at, potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the success as in trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members. So that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right. Thanks for watching, and please consider signing up for the trailer services. Bye-bye.